The NRGU. This is the US Big Oil Index 3X Levered ETN for microsectors. So it's the NRGU, US Big Oil. So generally when you're talking about the energy sector, you're really just talking about oil. And that's the biggest thing in the energy sector. And this is just the big oil ETN from microsectors. And again, ETN means exchange traded note. And note means there is not actually any physical backing on this thing. There's not even contracts for companies or oil here. This is just a debt note from this company, MicroSectors. And there's counterparty risk in an ETN. And that's one thing to note. And then you get triple leveraged, which means every time that you get volatility up and down, you lose a percentage on the down. So if you went up 20% and then you came back down to even, you don't come back down to even, you come back down a little bit past even and you lose a little percentage every time. So these triple levered ETFs have that risk built in. It's the compounded math risk. And here it's unbacked, and now we're going to take a look at this insanity. It was 60 not too long ago. 50, where's the beginning of this thing? 20, and the S&P did like a 1, 2, 3 wave down and a 1, 2, 3, 4, 5 wave up. And this thing went from a bit under 40 to, man, $2 or $3. So that's a real crash. And this is the magic of an ETN or an ETF. When you get oil contango and things just go really low, and these ETNs and ETFs can be worth less than the actual underlying assets are even worth. And it's triple levered, so the height is exaggerated and the lows are more realistic. So that is this thing, and let's put auto on and see what the actual shape of these moves have been since the crash, because it's a little more dramatic than the flat line makes it look like. And from the bottom, our 5 wave has looked pretty well. We didn't get the big first bounce, but we got some big moves here. And this is pretty much following what the S&P has been doing over the last couple of days. So this is a pretty S&P looking wave since the crash. I think it did sort of normalize here, and it's sort of following the S&P now. And so we get a complicated situation for oil, where it looks like the credit contraction cycle is going to be coming down, which is bad, and it looks like the oil price is going to be swinging up, which is good, and it looks like volatility is going to be increasing. So here's the idea, is that this thing could be pretty flat with these two forces happening against each other. It could go up, it could go down, it could go sideways, but it should do all of those things with volatility. And being a triple levered ETF, you're going to be losing money on every swing in that volatility. So this is my look on a levered ETN, is just extra risk on every part of it. I would much rather short an ETN than go long on it, because those losses kind of go to your benefit if you're shorting. But I don't know about shorting this mess right here or going long on it. That's just crazy. And yeah, I guess I would rather short this thing if it was in a position to short, which it probably is, but I don't know. This thing's crazy, and I'm staying out of it. This is Brian Lewis with MMT Investing. Please hit the like button to help me out with the YouTube algorithm. This is not trading advice. I don't know if there's anything else to kind of point out on this. I mean, The oil contango situation is supposed to go out for a couple months increase. The oil oversupply is supposed to be like 5 months. So there's not really a good outlook on these companies becoming really profitable in that period of time. But a reverse into a positive expansion phase is going to be helpful, and starting from this low is going to be really helpful. So there should be a value investing position at some point in this sector, but you can't value invest with a triple levered ETN. This is just for like day trading, because the longer you hold on to a levered ETN, you just lose money and lose money and lose money across all the volatility, and it's not a good thing to hold long term. And it's okay-ish to go long very short term, and it's better to short this thing. Or if you wanted to go long, you could short the inverse ETN or ETF. It's much better to short these ETNs and ETFs than it is to go long on them. And that's kind of the look. Who knows what's going to happen with this? This is nuts. It's just nuts. Okay, happy trading.